Okay, picture this. It's early in the morning, you've got your coffee, and you pull up the financial news. And what you're seeing makes absolutely zero sense. One part of your screen is just exploding with bright green, unbelievable numbers, while the other side is just a sea of red. So let's dive into this and figure out what on earth is really going on.
And bam, the first thing that probably catches your eye is a number just like this one. We're talking before the market has even officially opened for the day, and a single company, INVO Fertility, is already up nearly 300%. I mean, that's not just a good day, right? That's a did I just win the lottery kind of day.
And look, it's not just a one-off thing. You glance down the list and see a bunch of companies with these huge, triple-digit gains, all before 9:30 a.m. on the East Coast. It looks like an absolute feeding frenzy out there. Just a picture of massive, widespread wins.
But then, you zoom out. You look at the big picture. The S&P 500, the index that tracks 500 of the biggest companies in the US, is actually down over 1%. The NASDAQ, the Dow, they're all in the red. How does that work? It feels totally backward.
So this is the big puzzle, isn't it? How in the world can individual stocks be shooting for the moon while the market as a whole is sinking? Are these two things even happening on the same planet? Let's dig in and figure this out.
All this chaos on Wall Street, it might look totally random, but I promise you it's not. To actually understand the logic behind it, we've got to pull the camera way back from the day-to-day noise and start looking at the bigger picture. And to get that 30,000-foot view, we're going to turn to something super helpful. Morgan Stanley's 2026 economic forecast. I want you to think of this as our map. The thing that's going to help us understand the huge, large-scale forces that are really at play here.
So, here's the headline from the folks at Morgan Stanley. Basically, they're saying they expect weaker growth and a softer job market. Now, that's not necessarily a recession, but it's for sure not the booming, high-flying economy you might think is happening based on those wild pre-market numbers we just saw.
Okay, so what do these numbers actually mean? While GDP growth under 2% is pretty slow and steady, it's not a boom, but it's not a bust either. And unemployment at 4.5%, that's still pretty low historically, but it's definitely higher than what we've seen in the last couple years. So what these numbers are really painting is a picture of an economy that's just kind of coasting, no big fireworks.
All right, and this brings us to the most important idea of this whole explainer. I want you to think about it like this. The big economic forecast is the climate. It tells us the general conditions for the next couple of years. And for 2026, the climate is expected to be generally cool and overcast, not some blazing summer heat wave.
Now, if the climate is cool and overcast, let's look a little closer at the clouds, because there's another huge piece to this puzzle. Not everyone is experiencing this economy in the same way. You might have heard this called a K-shaped economy.
Wow, this chart just lays it all out, doesn't it? The top 20% of earners hold a staggering 71% of the country's household net worth. That creates a fundamentally different economic reality for that top slice compared to pretty much everyone else. And here's the kicker. The wealthiest households, their money is mostly in things like stocks and mutual funds. So when the market does well, they feel it directly. But for the bottom 20%, their wealth is tied up in physical assets, their home, their car. It's like they're playing two completely different financial games. All right, let's pivot to another huge driver in this economic climate, and it's the one everyone is talking about: the massive investment boom in artificial intelligence. It's everywhere, right? Billions with a B being poured into AI. And yeah, that's a huge engine for the economy. But, and this is a big but, there's a nuance here, a catch that's really important to understand.
So, let's say a company makes a giant announcement. $1 billion in AI spending. Sounds amazing, but hold on. A huge piece of that money immediately goes overseas to buy imported chips and hardware. Another chunk is for software that doesn't even get counted as a final product for the US economy. By the time you do all the math, that big flashy number, well, it gets a whole lot smaller.
And this chart just nails that point. Look at the gross contribution, almost 0.4 percentage points to GDP growth. But once you subtract all the stuff we have to buy from other countries to make it happen, the net contribution drops to just over 0.2. It's still significant for sure, but it's not quite the economic tidal wave the headlines might make you think it is.
Okay, let's put it all together. We have our climate, a slow growth economy, a split consumer experience, and a big AI boom that's a little less boomy than it looks on paper. Now, let's tie it all back to that chaotic morning and finally make sense of all that noise.
Remember our analogy? Those wild day-to-day stock swings are not the climate. They are the local weather. And weather can be crazy, right? Totally unpredictable. You can get a sudden, intense hailstorm on an otherwise cool and calm day.
And there's our hailstorm. That nearly 300% jump for Invo Fertility, who knows? Maybe they had a positive trial result, a buyout rumor, or just a wave of speculative trading. Whatever the reason, it has almost nothing to do with the 1.8% GDP growth forecast for the entire country.
And then there's this, our seasonal forecast. The Morgan Stanley report is the total opposite of that daily chaos. It's slow, it's methodical, and it's based on millions of data points to figure out the overall economic climate. It's the opposite of the fast, chaotic, and often emotional daily weather. So, here it is, the big secret. The two things we saw this morning aren't contradictory at all. They can absolutely be true at the exact same time. You can have intense local weather events, like individual stocks soaring, happening inside a much broader, more stable economic climate. A single thunderstorm doesn't change the fact that it's autumn. And really, that's the whole ballgame. It is so easy to get caught up in the drama of the daily weather report, but understanding the difference between that short-term noise and the long-term climate is the real secret to making sense of it all. So the next time you see a storm in the headlines, ask yourself, is this just the weather, or is the climate actually changing?